Hey everyone, welcome to a Optimum FX weekly analysis. It's currently Tuesday, the 16th of November, 2021, about 9:20 p.m. So roughly about 40 minutes until NY Open, where I am. It is a bit late in the week, or usually compared to when I do my weekly analysis, but nevertheless, this will be the weekly analysis. As usual, I'll be analysing our major currency pairs, commodities. I'll be looking at global equities on the high time frame, the 4 hour, to map out potential trade ideas. But firstly, we'll look at what macroeconomic data is going to be released and map out potential trade ideas with the fundamental and technical confirms. Okay. So firstly, let's focus on what's happening in the US. So as I did say, this is essentially the third week of November. So other than what's already been released, we did have NY Empire State Manufacturing Index, which was actually well above consensus, where we did see appreciation in the dollar. One thing that we have coming out in NY session tonight is retail sales and import and export price index numbers, and subsequently to that, we do have a couple of Fed members speaking, and we do have a lot of Fed members speaking throughout the week. So just be very cautious when you are trading any dollar pairs, and if you're trading US equities overall, just understand the impacts that they can actually provide. So yeah, just be very cautious of that. So moving on to Wednesday, we do have housing starts and building permits, along with Fed speeches. And on Thursday, as usual, we do have initial jobless claims, followed by a Philadelphia Fed manufacturing survey. And to end the week, we do have a couple Fed members speaking. Okay, so next thing is with the UK. So we did have the Bank of England monetary policy report hearings. So this was just pretty much a report subsequently to their monetary policy meeting. So the interest rate decision, everything was status quo. There wasn't any major amendments or revisions. So yeah, obviously, it's very optimistic throughout the UK economy. Obviously, there are some setbacks with the current, dilemma with COVID and the current restrictions that are in place. But overall, very hawkish and positive sentiment for the UK economy. So, with that being said, we do have some Brexit optimism as well, with EU and UK looking like they're about to come to a deal. But to me, they're always fighting. So, it's just a bit of volume and volatility that we can take advantage of when trading sterling or the euro. So moving on to Wednesday, we do have inflation numbers, so PPI numbers and consumer price index numbers being released. So yeah, we're definitely going to see some volatility across the sterling and our UK equities as well. And on Friday, we do have retail sales being released. Moving on to euro, we did have trade balance numbers released on Monday, and we did have employment change numbers too, which was actually well above consensus, and we did see a bit of appreciation in the euro. But overall, a major risk currencies, for instance, Aussie, euro, sterling, they have been falling to the downside against the dollar, due to the Federal Reserve steering away from a accommodative monetary policy to a more stricter monetary policy conditions. So that's why we've seen a lot more appreciation with the US dollar. Okay, so moving on to Wednesday, we do have ECB President Lagarde speaking, and inflation numbers as well. Moving on to Japan, we did have GDP, which was actually well below consensus. It's showing you quarter over quarter. Obviously, these are the preliminary numbers, but yeah, it's showing a contraction for this quarter. As we know, because Japan has been taking a beating quite recently, because This is still encouraging a lot more accommodated monetary policy. I believe they did come out with an additional stimulus for people under the age of 18 due to the current conditions throughout Japan. So, sorry, my internet just dropped out here. Yeah, alright. So moving on to Japan later this week, we do have merchandise trade balance and export and import data being released, and then we do have CPI numbers being released on Thursday. Moving on to Canada, we do have President Canada members speaking later today. On Wednesday we do have CPI numbers being released, and to end the week we do have retail sales. Okay. Moving on to Australia and China, we did have retail sales being released, and industrial production, which was well above consensus, which is showing a lot more hawkish data throughout the Chinese economy, which actually feeds into the Australian economy as well. And we did see the Australian dollar start to appreciate from this data. Obviously that's all said and done. And then we did have the RBA meeting minutes where they were actually postponing the hike rate. And when we go back to the Australian dollar, I'll quickly show you what happened prior to that. And now with dollar gaining a lot more traction to the upside, we've seen Australian dollar fall to the downside in the short term. On Wednesday, we do have wage price index data being released, and we got RBA members speaking on Thursday. Okay, so let's quickly hold on. Let me bring up Australian dollar again. All right. So Australian dollar, obviously, on the high time frame, we are in a bearish structure. Obviously, like I've been saying in my previous weekly analysis, we are still following the Fed sentiment. I don't really want to take some buys long term because I don't really have the fundamental reasonings and biases to confirm or to prolong further buys. Obviously, we can definitely recognize this as an exhaustion area with these counter bodies here, and now we're just showing this bearish structure to the downside now. Okay, so obviously here, like I was discussing before, this 4-hour candle, so this 4-hour candle was actually this morning, and this was anticipation for a very hawkish meeting minutes from the RBA with the monetary policy meeting last week. Obviously that actually got cancelled out, and now we are just steadily moving to the downside. Okay, so when it comes out to mapping potential trades out, I probably want to clear below these previous candle bodies here for us to chug further to the downside. Okay, so yeah, I probably want to do that, matching with these candle body lows here, and then potentially we can actually snap back in this range here. Okay, we can snap back into this range and start to adapt to this bearish structure with appreciation in the dollar, and a more dovish tone from the RBA, and we can take these sells further to the downside. Okay, however, obviously we can go in for some high risk, high reward buys, but to me, I'm following the current market structure and analyzing price and analyzing buy and sell orders and order flows, but I don't really see a point, especially with this current structure at the moment, to start buying the Australian dollar. If you're buying the Australian dollar, it's most likely going to be a pullback until we actually break out of this corrected structure. Okay, so potentially once we break, start to retest the previous highs and then continue back up. But realistically, I don't really have any fundamental reasonings to start buying the Australian dollar, so really just anticipating some further sells to the downside. Obviously here, you know, I don't really want to start taking sells here because if we actually do pull back here, this would be like a 50-50 make or break area. You know, very high risk, high reward sells. Obviously safer buys once you close above here, but to me, if we actually do pull back to this previous high here, we can then start to recognize that more buyers are coming back into the market. But to me, I'm looking for further sells and taking a break and retest below here for some safer sells and taking them down to these previous lows here. So roughly to 72,400, which is about 100 pip range from where we are. Okay, so that's what I'm seeing on the Australian dollar. Now moving on to euro dollar. So euro dollar, we're just trading at this key level here. It's just falling to the downside. So probably the only area that I'm probably looking at the moment would be this key level here at 112 flat. Okay, so based on the current market structure and the most previous price levels, I don't really want to start taking any buys just based on this current market structure being formed. Okay, to me it'd be a lot safer to take the break below here, get a nice retest and come down to 112 flat. So yeah, to me that's really the most favorable. However, to me this is just generating buy and sell orders before we actually do the continuation move, and more than likely when we're following the current market structure, adapting to the market headlines and adapting to, on a macro sentiment, to me there is no reason to start buying the euro. Okay, so to me I'd rather wait for the break and retest for us to continue back down. However, if we do close above here, we can potentially start to mirror this initial downside move and push to the upside, but more than likely with the current market structure we're most likely going to go for sells. So that is a very optimistic trade idea, but I would veer away from this from the buys. So I'm just anticipating further sells. Okay, euro. So obviously a strong downside move. I won't be surprised if we do consolidate here prior to the inflation numbers being released. Okay, so I'm gonna keep that in mind. Next thing is GU. So GU, like most of our risk currencies, we have been trending to the downside. Okay, so ideally what I'd like to see, I want to see like a clean break below what's this price level, about 134,250. okay, and more safer sells once we break and retest below the lows here at 113,500 for some continuation sells to most likely the psychological price level. Okay, so that is one trade that I'm looking at, but I will just zoom in here so we can actually see the candles a lot more clearly. Okay, so yeah, so that's ideally what I'm looking for. I'm not really looking for any long-term buys. I'm just following the current market structure. Obviously we do have the Bank of England potentially hiking rates as soon as next year, like most of the major economies, but we did have a massive curveball at their last meeting, where they did anticipate at the start of October that they were going to hike rates. At this meeting, obviously that got completely cancelled out, and now we're just being trending to the downside. Okay, so ideally, obviously this is a strong liquidity level here, which is about 20 pips away now. But if we can break and retest here, I really feel safer if we can break and retest below these candle bodies here, because that will show me a lot more sell side liquidity, and we can push further to the downside, break and retest, and then continue down to the psychological price level of 133 flat. Okay, to me, I mean, if you're anticipating buys, obviously it's just a pullback in the short term. So obviously here, we got these highs here, lows, highs, lows, highs, lows, and now we're just generating our high. Potentially we can go back up to 135 flat. That is a possibility, but to me that's just grabbing more sell orders. It's just seeing price being pushed to more favorable supply zone before we actually continue our next leg. So obviously break and retest here, continue down, or we can do a bit of a liquidity grab to 135 and continue further to the downside. Okay, but I don't really want to start to close above here, because then we're just invalidating this bearish corrective structure. Okay, so yeah, that's what I'm seeing on GU at the moment. GJ will be very similar. So I mean, obviously, you know, with the Japanese economy, we do see a lot more accommodative policy from the Bank of Japan, due to, you know, how they're dealing with COVID at the moment, and obviously with this supply disruptions and everything on a macroeconomic level. Obviously the economy is struggling a lot more compared to our major economies, you know, such as Australia, Europe, England and Canada. Okay, so obviously, you know, it is a bit choppy around this price level, but as I did mention, to me, I was always looking at 152 flat, because right here, when we actually did start to peak, like we literally peaked roughly about, I think, 600 pips. So we actually peaked at roughly about 600 pips based on rumors of the Bank of England hiking rates, and obviously that's all been cancelled out from this. Well, this is the downside move when the actual meeting happened, but now we just got a higher time frame order block being formed, and during today's London session, during today's London session, obviously we actually did close above here, but to me, I just don't think there is enough buy orders for us to continue and break above this order block high. I just don't think there is enough buy orders. To me, when we're following the current market structure, we can potentially adapt and take some high risk, high reward sells, because we are in a bit of a strong risk off sentiment, so we can take some high risk, high reward sells if we fail to have a bullish candle close above this order block high here at 0.600. So if we fail to close above 0.600, we can take some high risk, high reward sells, take them below here, and take the safer sells below 0.500, which is roughly 100 pip range, and we can take these sells here, and we will understand that there's going to be a lot of sell side liquidity below 152 flat. Okay, so that's what I'm seeing on GJ at the moment. Obviously high risk, high reward sells, but if we do close above here, I don't think we will, based on the current market structure. I don't think there's enough buy orders for us to close and break above here unless we see some really strong UK data and we see some crazy Brexit optimism, but to me that's a bit far-fetched. I'm just adapting to the current market structure. So obviously we can take some high risk, high reward sells. To me it's more favorable, and taking the safer sells once you break in retest below 152.500. So yeah, that's what I'm looking for on GJ at the moment. Next thing is Usdcad. So yeah, Usdcad, we've been steadily chugging to the upside. Obviously we're just seeing USD take a bit of a beating due to Canadian dollar appreciation from oil, from the rally in oil. Okay, so ideally, with what the US dollar is showing us and still following the Fed sentiment, to me, I'd probably like to see a nice retest at 124.700 for some medium risk buys, and to me, safer buys. Obviously, once you break in retest above 1.26, which is realistically at these previous counterbody lows here. Okay, so that's probably the best trade idea that I'm looking at. I'm not really looking to sell Usdcad. If we do see some dovish sentiment from the central bank members, obviously that can create, you know, some whipsaws or some volatility with our US dollar. But overall, you know, I'm still bullish on the US dollar based on the Fed sentiment. So other than that, yeah, so just mainly looking for buys on Usdcad. Okay, so moving on to Dixie. So Dixie, we're pretty much approaching 95.500, and after this strong bullish candle to the upside here, we actually failed just to grab liquidity. Like I was expecting like a bit of liquidity grab, just a bit of a pullback to 95.200. I can definitely still see that happen once we close it below here, take potentially some short-term sells to 95.200 and take the continuation buys to the next half time frame key level to 95.900. Like I said, I don't really have any reason to start selling a dollar. I got no fundamental catalysts to start selling a dollar. Like right now, it wouldn't be, it really wouldn't make sense whatsoever. So obviously pull back on a dollar, break and retest, snap back to the range low, and then once we clear above here, we can start to rally. Okay. So next thing we're going to look at is Japanese yen. Obviously Japanese yen is still very flat. If we actually come below 87.6, we can take we can take some further sells on yen. So obviously we might be able to get some strong reactions here if we fail to close below here. Just keep in mind, if anyone that does look at the yen currency index, it only moves during NY session, so it's got to keep that in mind. But yeah, if we do close below 87.5, obviously we can start to go short, continue our shorts with the yen. But yeah, to me, it'll be a